Good evening and welcome back to PreciseAlgorithmTrading.com. It's Monday, June 3rd, 2024, and let's look at the markets. So, tie in here to our automated trading systems. We had some good up movement in our Dow positions and then gave back some later in the trading day. So, that was our trades today. Whoops. I don't know why it does that, but there you go. Those are the trades today. Um, this one, the Russell hasn't moved since the 30th. The Nasdaq's coming back to life, which is great. Hope that was what I was hoping for. A pattern like this, a pattern like this, a pattern kind of like that, and a pattern kind of like that. So coming back up here to make new highs, hopefully soon. And today's trades looked like this, which was pretty good. So um, compare that to the old version, which also doesn't look bad today, except we got a lot of room to make up, to go up. And I'm actually expecting that to happen fast when it does. But I still like this pullback situation better than this one. And since it's all based on the same math, except that this one actually has fewer trades, there's some, I think, benefits to it. But anyways, this is what it looks. This one looks like for trading today. Similar. It's actually gained more today than the other one did, but like you don't have to endure quite as large losses than the other in the other system. So, all right, going on to the regular markets. So here's the S&P 500. We had quite a range today, I believe, in the overall markets. So there you go. We had a big uh, doji, um, dragonfly doji, I think is what they call that. It's basically a hammer candlestick that's a doji. So actually, it's pretty bullish to think about and look at. You do have negative momentum now, um, and it's not in a squeeze. So the question is going to be, can this thing turn itself back around? And I'm sure it can, especially since we got positive momentum over here over zero, and that's on the hourly chart. So if this thing builds from the inside out and continues to work out all this negativity that we got here, then we can go back up again. Probably still in a sideways range. It's going to be probably something like in that range going sideways. I know that's a big range, but that's from that top pivot to that bottom one. So um, I'm not going to leave it on there because it's irritating. But that's the range I'm looking forward to break out of, probably to the upside. So the S&P today actually went up 5.8 points by the end of the day, and it looks like that. It's probably not as negative as the other candle. Interesting. That doesn't look like a dragonfly doji. The other one has the aftermarket moves in it. Although this has the same negative momentum under zero at this point. So, really not that much different. This is that action that I was talking about in after. I'll call this a hammer candlestick, even though it's probably not exactly by definition the one that happened on Friday. And then today we end up with an actual hammer candlestick. I've seen this sometimes, most of the time, inside the body of Friday's hammer, and that way it just freaks everybody out. So the bottom line is, if you're managing all of your positions independently, this shouldn't knock you out. You just can't freak out. Um, your individual positions, some of them may stop out. And I had that situation today with, I'll just show you, OII, I believe. So this guy, I've been in this thing and out of it quite a bit lately. Um, Was expecting, like I say, in that same kind of a range and a breakout from that. But of course, it came down and took me out. So, which is a bummer, but that's part of the reason why I use these stops. And based on our stop would have been back here, and that's when we got taken out. Now, I didn't have to endure any further than that. This thing probably went down at the end of the day. It went down 8.5 or 8.15%. I only endured probably 6% of that, which sounds terrible, but now I'm out and I don't have to think about it again. And I'm still in plenty of other good positions. All right, anyways, that's the S&P. The Dow went down 115 points today, and we have positive momentum above zero on the hourly chart, trying to wind itself back up again. But we still have negative momentum under zero on the daily chart. Maybe we want to look at the 4-hour, which I have over here on the right-hand side compared to the daily on the left. And we have positive momentum under zero on the 4-hour chart. This is not in a position that I'd be ready to take it long yet. However, if I was, first of all, I'd wait for the moving averages to turn up and turn green again. But once you go long on this, you probably want to make sure you're at least probably either this lowest pivot back here, or at least these lower pivots down here. Give yourself room. And then if this thing was to turn back red again, or even go up and roll back over again, go up above zero and turn light blue, and then roll back over again dark blue without putting in a new high, that'd be the end of the ride, I believe. So you gotta be careful, or the market will beat you. All right. You can see, even if you're going to do something like that, you're only going to get back up here probably to these moving averages before you really hit some resistance. So, anyways, that's the Dow. The Russell today stopped at the 618 line, pretty much right on the money. Tried to go below it, came back above it, and now it started in a squeeze on the daily chart. And we have a new signal for the moving averages pointed up on the hourly chart. We have positive momentum, except it's negative on the true momentum indicator. That little arrow right there is actually positive momentum. And so we need follow through on the squeeze to back to the upside here. And this is going to be the one to watch. I need to consider getting into this sucker. I'm probably going to wait for these bars to change yellow on the daily. Or I could just wait for this to turn light blue on the hourly. But I want to give myself alerts for tomorrow. And of course, I'm not in front of the markets for a while in the morning, but I'll have plenty of time to react, I think. This is not all going to come back at once. But for what it's worth, I expect, and I think I spelled this out the other day, this could be an inverted head and shoulders pattern with the target beyond the 1272 extension up here. Probably, and I'll just go ahead and put it on the 1618. And if I draw a line from the tip to the neckline, duplicate and extend. Oh boy, it goes well beyond the 1618. That could theoretically be a target. Now we need a break above the neckline for that to be quote unquote triggered. But I'm not going to wait around for it if I get all the other good signals. So speaking of targets, let's go look at NVIDIA. Now, I think this is going to be an interesting animal. So we're really close to 1187. We're at 1158, and that thing wants to hit that target, which I think is pretty cool. This, if you think about it, this looks an awful lot like that inverted head and shoulders on the IWM, the Russell. So this is the same kind of idea. Now NVIDIA is going to go break split over here 10 to 1 on 610. So I think historically, and anybody could prove me wrong if you want, but when you typically have splits, um, there's a lot of like anxiety, or a lot of people FOMO, fear of missing out. So they buy into that, and then it splits, and then the market, people expect that your shares are going to be worth more or something. I don't really know, but a lot of times the price will fall after a split, and I think I've seen that happen more often than not. And I was told years ago that it used to be, um, when a stock split, it was a good thing for the stock, and it made the stock really popular and step up, and a lot of people traded into that. Well, I think that all that logic fell apart after the 90s. But again, I don't trade splits, and I'll stay away from them. They're kind of like earnings for the same reason. It's like you just don't know how the market will react to something like that. Now I will buy back into it once it's a tenth of what it was, which it's now 1180 or 1158, so it'll be 115 bucks, which is a much more popularly traded price. If you follow what I'm trying to say there, more people will trade a $115 stock than an $1,100 stock. All right, that was RUT. Nasdaq. What did the Nasdaq do today? It rose 93 points in the same kind of a tough environment with all this volatility, but still pretty much hanging on to that bullishness there. The transports, IYT. Let's just look at IYT. We have positive momentum under zero, but we don't have confirmation of the moving averages yet. So this is not something I want to step in front of. Although we do, I don't know if I'd call that a break of structure or not. I think we actually need one more to go up to confirm. So what I would actually expect this to have to be like a double bottom or something here before I would consider going long. All right, oil. Let's look at oil. Oh yeah, oil stopped out on me hard today, and I was really hoping after it broke that trend line to the upside that it was going to be a good upside trade, but oh well, we got taken out. And gold, GLD. Gold's hanging up there pretty good. It's not in a buying position, but it's pretty good. It's not falling apart like oil is. Bonds are doing that breakout of that line again. We're negative momentum under zero, not turned back around yet. Positive momentum over zero on the hourly chart. And we're going to be fighting against these moving averages to the upside. So, however, it's generally in position to go long. If you went long here, you're probably going to have to go underwater some. That's why I would wait for a pullback and this thing to roll over on the hourly to buy in. but you can almost see an inverted head and shoulders on the hourly chart here. If you have an imagination, you'd need a right shoulder over here, and then this thing could take off and probably get back above these moving averages. Okay, I think Bitcoin took off a little bit today. That's weird. It says it's positive 2.54%. But that sure looks like it's negative to me, so I'm not sure what's going on there. I'm not in it, so it doesn't bother me, but I am in coin, and it did go positive today. That is weird. That makes no sense. That seems to be wrong, which is unusual for Thinkorswim, but in any case, yeah, oh well. Coin's in decent position. I hope Bitcoin goes with it, so that this is the actual Bitcoin, I believe. Yeah, the Bitcoin ETF. And it looks like it's relatively positioned to go higher. But there's not enough back data to give you everything you need, so I stay away from this. But I did put it in here to track, so. And then I'd stick with BITO just personally because it's typically, it's got a lot of history. So. But it is weird that it says it's up. It was up today, and it's not. So I don't know what to make of that. All right, let's keep going. Put this back on the markets. So here's the S&P 500 still above the cloud, still green. For fun, let's do NQ. Still above the cloud, still green, / RTY, the Russell. Above the cloud and green, that's good. And /YM for the Dow. Below the cloud, hanging on for dear life. In the cloud, I should say, but that's pretty wild. I mean, it looks like it's trying to claw its way back out again. So here's the VIX, the volatility index, and it's been a lot of volatility, just a lot of range. That thing looked really negative at one point today and then came back in. It's the inverse of what the other markets look like. This is kind of an inverted hammer candlestick or dragonfly doji, or there's I forget what the hanging man, I believe, candlestick. If you follow candlesticks, none of it matters. It's just the psychology of the price went, or the VIX went way higher today and then came way back lower again, which just shows you that the market went really negative and then it came back positive, and that shows that there's still a lot of buying really under the hood. And then let's look at the whole market together with some momentum built in. The momentum's negative under zero, but looks like it might be wanting to curl around. By the way, if you follow divergences, I don't talk about them a lot, but if this was to curl around and turn yellow and go back up above zero again, we would have a positive divergence. No, we wouldn't. We'd have positive confirmation because we also have positive price points. It would actually show that without it getting buried in the lower reversal zone. But that's just a little bit more power to show that the momentum actually didn't even come down. If it does that, didn't come down as low as it did the last time, and that's actually a positive sign for the market. And last but not least, let's go look at bullish percent indexes at stockcharts.com. And I've explained these in past videos, so you can go look. Minus 5.56% on the Dow, which is fairly bearish. The NYA, minus 0.44%. The transportation index didn't move. The NASDAQ, minus 0.04%. Halfway through the day today, I looked at this and I think it was either didn't move or it was positive. The S&P 500, minus 0.35%, which isn't hardly anything. The S&P 100 is actually positive 3.39%. And the NASDAQ 100, I think, is positive too, 4.88%. So that's showing some strength. And that's really what these things are for, is to show you strength or weakness that's building. So, and this typically will move in advance of the other markets, of the actual markets. So that's what I got for you for tonight. And we'll talk to you next time. Take care.